So ahead of Mr. Powell's testimony, and based due to the prepared texts that were just released earlier, we're giving this live analysis just to explain this decline, this pressure on dollar as the actually following the release of the prepared text from Mr. Powell. So Mr. Powell hasn't really testified yet. We have another 3 hours to go until he actually testifies, and until he testifies today. But as we usually as is usually the case, we have the testimony in advance, the script in advance. So if you just let me just share my screen as well. Okay, perfect. Here we are. We have dollar, and let me make sure that you can see me actually and hear me. Sound is on. Okay, should be okay, I guess. So yeah, as you can see here, we have the dollar index. We'll put the 30 minutes chart just to see the reaction on the text release, on the statement release of Mr. Powell. So what we are seeing right now is that it looks that the market, or the investors, the market in general, is like ignoring the data so far. We had PPI just less than 30 minutes ago, higher than expected. Okay, but the statement is what has dominated this move, the dollar reaction, this initial dollar reaction. So dollar came under pressure, and there is some kind of a selling pressure, actually quite strong selling pressure, at least in the intraday picture, with the asset losing more than 0.4%, like well below yesterday's peak, 92.80 currently, already breaking the 200 period moving average in this intraday picture, 92.40 for the time being, and that is that it looks to be like due to the more dovish tone seen on these prepared remarks released from Mr. Powell's remarks, actually. So a more of a dovish tones. But yeah, of course, what is really matters, what we where the focus is on the actual testimony and the question and answer session. So that could actually add further volatility into the market. But for the time being, the statement, as I already repeated several times, it looks more dovish, ignoring the data so far, the stronger than expected PPI readings, with the PPI actually rising to 7.3% on a yearly basis in June from the 6.6% in May. And if I'm not mistaken, let me double check the monthly reading. The monthly reading was also higher, 1% from 0.6% expected, and from the 0.8% seen last month. So, hello everyone. Hello Nim. Yes. Okay. Yes, you can start putting some assets on that you want me to cover and want me to analyze. Just a quick reminder before we move into the and before we start our market analysis, guys. So other than Mr. Powell, in less than an hour, we have also Bank of Canada monetary policy and interest rate decisions. So that will be also in the spotlight ahead. So these were actually the two the most important events of the whole week. So in less than an hour, Bank of Canada will release monetary policy and having a press conference just 45 minutes before Mr. Powell's testimony. and we have another 3 hours to go until Mr. Powell's testimony. So, okay, yeah. Before I start the live, actually, I would like to quickly read out loud some important remarks that we got from that prepared script from Mr. Powell. So the most important of all is that he stated once again that job market is still a way off from progress. So once again, he repeats that labor market hasn't really fully recovered or is not in at a level that is sufficient for the Fed. So they will keep monitoring the job market, and the job market will be the key for the Fed to begin the bond buying taper. Okay, so also he didn't comment it, but in his statement he actually stated that inflation, the hot inflation that we have seen yesterday as well, is likely to remain elevated in the upcoming months. So according to the statement, the expectations are broadly consistent with Fed's target. So these are the key highlight, some key notes from the statement, along with, as I'm reading it out loud right now, along with strong jobs gains expected to continue in coming months. So they are expecting that, so as the health crisis continue to ease, at least in the United States, job gains expected to continue in coming months. So that's it from now until we have, until we watch later on the Mr. Powell being on stage. Okay, so let's quickly shift to the MT4, and dear Nim asked about cable. So let's start with cable. Actually, before we shift to the cable, let's see a bit, just quickly, the dollar index. This is the 30 minutes chart, guys. Decisive extension to the downside for dollar index for the time being, actually, since 12 o'clock server time. So for actually 7 consecutive sessions, down to 92.35 territory. Momentum indicators are turning lower. Enter the oversold territory, at least for the 30 minutes chart. So the next support level for the asset could be seen on this double fractal over here, as you can see if I zoom in a bit. So 92.28, just a few pips away. The asset has managed to revert more than 60% of the gains seen since yesterday. Okay, on this rise, especially on this big bullish candle seen on the inflation release. So reverted already more than 60% of Tuesday's gains, and the next area to be seen would be the 92.30. While further negative bias could bring the asset back to week's lows. So that could take us down to the 92 round number, and also the low of the week, which was retested, actually, is the low of the last 2 weeks of the whole July, if you notice. So it's a nice floor being sustained the whole July so far. Okay, 92, 91, 96, and 92, a key support area for the month. Okay, so a break, an extension actually of this decline could open the doors to 92 lows. That was for dollar, US dollar, so US index. So let's move to cable. Okay, here we are, and let's let me quickly put my template on. Intraday crossing, here we are, zoom out a bit, actually. Okay, just quickly. Also, okay, Abhijit is also asking about cable. Okay. So let's start with the 1 hour chart. Nice rebound away from 138 level, retesting once again the highs that have been seen in July. So you can see that is quite a significant resistance area. This is the 1 hour chart, guys. And as you notice, there is a nice resistance, immediate resistance territory that it was retested on the 6th of July, then again on the 9th up to 30th of July, up to yesterday, but the asset didn't manage to cross above it. So something that has boosted initially, okay, in the Asia session initially, the pound was pretty much the dollar weakness. However, in contrast with the other assets, the cable, the pound, extended these gains after the strong UK inflation figures, providing a goodish lift to cable so far today. That's why, if you notice, that's why the pound keeps extending higher. Of course, something that it's another driver is another driver of cable is, as we said, the dollar weakness. Just the last 2 hours. What is it? Where is my dollar index? Actually, the last 4 hours in a row. So here we are. So a combo of factors refreshing this rebound on cable. It's the strong UK inflation figures that we have seen earlier today in the European, actually during the European Open, on the European Open. Also, however, is the weak dollar that is supportive of this bit on cable. So what is interesting is the fact that RSI keeps rising higher, and fast moving average, this is the 5 and 9 exponential moving average in this 1 hour in 1 hour chart, pointing further to the upside with upper Bollingers expanding higher. So for the time being, according to the momentum indicators and fast moving averages lines, there is still support for cable. Okay, higher highs, higher lows. It breached 138.93 territory, and it's just a breath away from the 139 and 139.10 resistance area, the one that I highlighted over here. However, just have a look on the bodies of these candles. They are quite big. Even the 30 minutes chart, you see this jump on the, of course, it was a dollar on the dovish tone of the statement that boosted cable higher along with the other dollar crosses, but it was, there is no tail at the bottom of this candle, big candle, suggesting that the cable is well supportive in the near-term picture at least. So if I just zoom out and just quickly check with you the daily chart, you can see that cable. So this is the daily chart, guys. Okay, cable lacks of direction in the medium term for the time, actually for the last more than 2 weeks. It has entered like a range. Okay, here we are. It has entered a range, as you can see. The last should be since the 80th of June. So struggling to, in the medium term, the daily picture, struggling to take to enter a trend. For the time being, it's ranging, consolidating between 137.40 and 139 territory. Even though what is quite interesting is the fact that had retested for 4 consecutive days the 20-day moving average, but 139 is a key strong obstacle on a potential reversal, exit of this range, and a potential rebound of cable. So that was on cable. Hopefully, I replied to your question, my dear Abhijit. And Nim was the very first. Asking about cable. So, hello, Mark. Welcome. Hello, everyone. Hello. I cannot tell you what to do, my dear Abhijit. Hopefully, I help you with the analysis that I have just done. Okay. If not, let me know and I will get back to you. Hello, Vicky. So guys, this is your session. This is Snap Live analysis to see what's going on, to see what you should take care of for the rest of the day. We said Bank of Canada, and especially the center is actually Mr. Powell will be in the center during the question and answer with Mr. Powell. Usually we're seeing a lot of volatility in the market, so take care during the question and answer session of Mr. Powell. Something that I haven't talked about earlier is that Bank of Canada is expected to reduce the asset purchases. Remember that yesterday, actually overnight, we have seen a big surprise from RBNZ that actually reduced the asset purchase. That was a bit of a surprise because it was expected to not to take any action actually, and to remain to keep more policy unchanged. So today we have Bank of Canada, which is also expected to reduce asset purchases in a weekly basis. This is something that Bank of Canada already done in the past, actually in the previous meeting. So a more hawkish Bank of Canada policy outlook is expected. And if that's the case, then we might see Canadian dollar being boosted, okay? So take care during Bank of Canada release. Yen, of course, let's shift to yen. So no one is interested about Canadian dollar, so big decline. Don't forget yen is a safe haven, but yeah, dollar weakness, dips, dollar, yen, actually all the major currencies are stronger than dollar for the time being. The dollar weakness is what's driving the dollar crosses. So a big dip actually might be the biggest one out of the major currencies. I need to check the traders board to confirm, but let me quickly try to do that. And it's a good excuse to show you also the Hot Forex traders tool as well. So let me quickly share it. Chrome, and here it is. Let's check together which are the weakest and which are the strongest currencies right now. So obviously dollar suffering against all the major currencies, and the biggest gainer so far is Kiwi. Kiwi against dollar and Kiwi against Swiss, benefiting against all the majors. This is Hot Forex Traders board, guys, if you haven't seen it in the past. Yen, so yen actually gains ground against dollar, but is a loser against Kiwi. So, okay, interesting. Sorry, that's our advert in regards to Traders Awards. And let's get back to our MT4 to cover dollar yen as Esther requested. So here we are. Big decline, broken immediate support at 110.18. Next support to be seen is the floor seen back in the 9th of July. So it's actually a break. The next support implies to a break of 110 territory, around 110 territory. So let me zoom out a bit. So I would like to add my regression channel, because as it has been in an upwards trend, in an upwards channel since 8th of July. And let me just, no. Just give me a second, guys. Okay, nice candle. It has a nice, channel. It's a channel that we have seen on the rebound back in the 8th of July. It was held so far, but just 30 minutes ago, it broken. And you see the break of the channel over here. And you see that, okay, I will change the color of the regression channel because it makes it a bit difficult to see it due to the black background. So I think now it should be okay, perfect. So it was broken earlier. So that was our initial immediate support broken. Then the next consecutive support broken as well at the latest fractal 110.18. The asset keeps moving lower. You can see that for 2 consecutive sessions, we don't even have a tail on the upper side of the candles. So this implies that the bears are in control. The bulls haven't even fight, or they haven't managed to even push slightly the price higher. So no tails, no upper tails in these candles, implying to a very strong selling pressure. Okay. So next immediate support 110, and if you just keep an eye on the lower fractals, on these previous down fractals, it could give you some nice support levels on a potential extension of this decline. And let's quickly check momentum indicators. I'd like to put stochastics on because we're 1 hour chart and I am hiding it. Just give me a second to duplicate it. So as you can see, bearish cross in the stochastic indicator was seen. Oops. Was seen 3 hours ago. Can you see that is barely cross it? Actually, I don't need the duplicated stochastics because you can see it perfect. So bearish cross. So what I mean by bearish cross in stochastics, it literally means that the fast line cross below the slow line. So this is an initial bearish signal, okay, from stochastics. So turn the cross, the bearishly cross end, there is a sharp slope with the fast line already enter the oversold territory. So there is further steam to the downside according to stochastic until both lines run out of steam and start like slowing down or even trying to get back above 20. So for the time being, stochastic's slope is aggressively, it's a sharp slope, something that implies to a lot of negative bias for the time being. MACD turned negative as well, as you can see in this 1 hour chart, even though signal line is still above 0. So there is a mix signals from MACD. RSI, again, another sharp slope pointing lower. just crossed 30 barrier. There is further area to be covered. So negative outlook is what there is a negative outlook in the 1 hour chart for dollar yen, with next support at 110 or 109.96. If we're gonna just stick on the lower fractals, we're gonna based on our analysis and finding our supports based on the lower fractals, or the down fractals. Next one, 109.87 and 109.75. So if I just, out of curiosity, I would like to see whether it clashes with my Fibonacci level. So yeah, 109.96 clashes with the 61.8 Fibonacci retracement level. So that would be a key support area for the day, for in the intraday, analysis. Gold. Let's move on to gold. Actually, I haven't covered daily dollar yen, but okay. Let me get this quickly. In the daily time frame, the medium term, daily, weekly, we have seen the asset sustaining an upwards channel since April. So, however, the last 5 days in a row, it has entered the lower Bollinger Band area. But it is, as you can see, it remains in an upwards channel. So only a break below the 109.50 could signal a potential reversal of 1 to 3 months in a row of an upwards move. Even though for 1, 2, 3, 4, 5 consecutive days, it hasn't managed to do to make any progress and actually enters back to enter the upper Bollingers. But yeah, let's wait and see. For the time being, is neutral to positive, stuck between a 109.50 and 110.50. So that's in the daily chart. So let's move on to gold, as water cool requested. So let me hide this. Okay. Gold should be somewhere here. Or it was here and I couldn't see it here. Well, it was the very beginning and I couldn't see it. Sorry. Here it was. Okay. Bam, bam. Okay. So gold spike at 1830. So once again, dollar is the reason for that. So let me just check my news feed as well, just to keep, just to be in line of any news updates. Breaking news. What's my breaking news? Fresh. Okay, nothing else has been posted in the latest in the news feed for the time being. Other than Canadian. No, that was other than Canadian manufacturing sales, which decline. That was the only thing there. That's the update, the newsfeed that I'm getting. So we had manufacturing sales in Canada falling more than expected in June, but we're gonna get back to the dollar CAD asset in a while. So let's see what's going on with gold. So gold jumps at 1830 territory, if I'm not mistaken. Let me double check. Just a breath away from 9, actually 1829.78, breath away from the 1830 territory. Let me put the daily chart, because this looks to changing the medium-term outlook for gold, because it literally reverted more than 40%, should be around 47% of the decline that we have seen the whole June and July. So after this dip, gold extended to 1829 levels, a level that we haven't seen since the 60th of June, so literally nearly a month's time. And just so the next, so in the, as we have seen, the last actually for the whole June, the asset, it rebounded, but especially the last 2 weeks, it has entered some kind of a consolidation mode with some doji candles, unable to take it to actually find a clear, to post a clear direction, bouncing between 20-day moving average over here, the 23.6 Fibonacci level and the 38.2 Fibonacci level. And today's closing, the closing of these daily candles, so tonight, it will be very important, because if it managed to sustain gains above 18, so let me zoom in to see this latest upper fractal, 1820. If it managed to sustain and move above 1820, okay, with a nice candle and not like a doji similar to what we have seen the last 2 weeks, this could signal a potential shift of the gold, the shift of the gold's outlook into a positive one for the medium-term picture, even though the 50% remains a key resistance level at 1830. Let me be precise, 1833. Round it up a bit. That was on gold, so extended gains, bounce higher. So keep an eye tonight on the closure of this candle. Let's get back to the daily, to the 1 hour chart. Though I believe this is what you want me to check. Bounce, closed outside Bollinger's. So it's a bit overbought. Okay, it's a bit overbought. At least this is what the 1 hour chart shows. Let me check also the 30 minutes. So, bam, bam, 3 consecutive sessions outside the Bollinger's, implying to a bit of an overbought situation, overextended reaction in gold. That doesn't change this bullish rally that we have seen, but it could imply to the need of a correction and the need of either a sideways move or a slight pullback. So the momentum indicators over here, can you see that? So the momentum indicators, TL cool, this is the 30 minutes chart, okay? They are positive, but this turn, the slight turn of RSI, and this turn, if you can see it, of stochastic, might imply the need of some pullback, maybe sideways movement, but overall everything is positive. So we might see a bit of a correction. That's a momentum indicator, moving average. Sorry, I keep pointing higher. In both 30 minutes and 1 hour chart, but it's outside Bollinger's. So yeah, it's overextended. So that's why, that might be the reason why we've seen this reversal, slight pullback in the new, in the latest 30 minutes candle. So, okay, next resistance area to be seen for gold. Okay, I need to put the 4 hour chart in order to show you the next resistance areas after that nice break, nice boost above. Can you see that, how important that area was? Can you see how important that 1820 level it was 1, 2, 3, 4 consecutive up fractals area. So it was a key resistance area that has been broken. So this could find more bids, more bullish pressure to a potential test of 1832. ATR is in this 4-hour chart is at 8.61. Just out of curiosity, let me measure this candle. Are you with me, guys, so far? Is everything okay? So let me measure that. This is okay. This is 17 already. So already managed to move by $17. Okay, in this this is so this candle needs another half an hour to close. But yeah, so next resistance 1833. Okay, if I just sorry, just let me put a Fibonacci extension, even though there are a lot of people that are not using them, but this will help me. Just get rid of that. Will help me identify other potential immediate resistance levels. So, oops, wrong. Okay. So this is a 4-hour chart, Fibonacci expansion, broken 100% Fibonacci expansion, broken 161 Fibonacci expansion. So the very next one will be, actually I need to manually add the next one. So, sorry. If you don't have the next Fibonacci expansions and you were interested to identify more resistance or support level, you can manually add them. So if you literally try to either Google search or let us, or just ask us what's the next Fibonacci number, it's quite easy. So let me know. So let me put that on. Fibonacci. So we'll put just we'll try to put just two, the 200 and the 261.8. That's the usual ones. I think these are enough. That you don't need to add more, because otherwise you might end up with an overextended Fibonacci expansion and might lead to some wrong decisions. So 601.8 FE 261.8. Okay, let's see. So the the very next one, as you can see, the 200% is already been retested but not broken. So next immediate resistance area at 1831.30 according to Fibonacci extension, and the very next one is at 1843 according to Fibonacci expansion. Okay, next resistance areas to be seen. Or you can use just Fibonacci or just pivot point analysis you prefer. I don't have my pivot point indicator in this PC, but yeah, you're free to use the pivot analysis. So let's move on. You keep asking about cable. I cannot tell you what to do, dear Roman. I can. What I can tell you, and what I already mentioned, is that in the medium-term picture, in the daily picture, it remains up sideways as long as it as long as it's between the 137.40 and 139 area. So only a break above 139, a decisive break of 139 could suggest a retest of 140 area, or even a move back to the high territory that we have seen in May. Now, in the intraday picture, the cable is in a rally, well supported since since Asia session from the dollar weakness, along with the combination, along with the stronger UK inflation number, and if I'm not mistaken, I've seen somewhere. Okay, there were some comments from Bank of England Deputy Governor Cunliffe, but that looks like they have been completely ignored by the market participants. But yeah, cable remains in an upwards in a rally since the beginning of the day, in a combination of dollar weakness and the strong data out of UK. So next resistance area, and quite a crucial one, because the round number is a psychological level, is the 139 level. So that's the next area to be seen for the time being. Nice strong bullish candles. It is a bit overextended. It closed in the last hour, in the previous hourly candle, outside Bollinger. So this implies to an overextended condition that could follow like a bit of a correction. So let's get to the 30-minute chart. Up, correction, a bit of a pullback, up, doji candle, a bit of a move lower, but so can you see that? So only a move, actually, if you, this is the 30 minutes chart, guys, okay? So on the latest rally, so on the latest, like this, on the latest upswing that we get, only a move back, at least to the mid level of this latest rally, could turn the attention back to 138.50 territory. So this looks to be, for the time being, a sideways move due to the overextended cable. Yeah, so so are you okay with this explanation, Gordon? As I said, key resistance level at 139. So before we move to CAD yen, I'm sorry, Shukuwama, I haven't ignored you. I have it in mind, but stocks open, and they open quite higher. I don't have my Bloomberg TV on, but so let's shift a bit on the stocks, in the US stocks. So let's start with, so here is, okay, sorry, that's just, let me put everything in order so we can, so, okay, I have my USA 100, my USA 30, and where's my USA 500? Let me put that on as well. Excellent. Let me check also my news feed. Do we have anything new? No. So US equities, extended rally. So if I put the 1 hour chart, let's start with the USA 500 extended rally. You can see how bullish this USA 500 future is. 1, 2, 3, 4, 5, 6, 7 consecutive hours to the upside, breaking yesterday's high. So if I just go down to the daily chart, you can see that the futures, the US indices keep posting fresh record highs. So today, a new fresh record high for USA 500 at 43.83 territory. So indeed, it was okay. It was retested. That area was retested yesterday as well, but there is a strong already broken it. So yeah, fresh record high for USA 100 continues consecutive bullish hourly candles. RSI retesting 70 barrier, sloping to the upside, pointing to a potential cross and an entrance to the overbought area. MACD is a bit neutral, to be honest. So that's a nice rounding bottom over here, which if is confirmed, if the asset managed to break it and confirm with the next consecutive candles and move further to the upside. So remember that if a rounding bottom is being confirmed, then this is a bullish signal. My fast moving average in the 1 hour chart, bullish cross like at 12 o'clock server time, so just 4 hours ago, and they keep pointing to the upside, implying that there is further upwards momentum, bullish momentum. So 30 minutes chart, same picture, broken yesterday's resistance, another fresh record high. So US equities actually, and if we don't like emphasize only on USA 500, but if we have a look also on USA 30, Dow Jones, which already posted a fresh record high at 35.63. So no, my bad. This is not a fresh all-time highs back, but it managed to break the high of the day and is at, it's at 35. So it entered the 35 that hundreds. No, what I'm telling you about. 35,000 territory. So nice boost in USA 130. USA 100 is the one that it has is the least appreciated one. Retested yesterday's high, but for the time being, it fails to break the round 15,000 territory and the all-time highs. 15,000 is an all-time highs level, so key resistance of that. But you can see that overall, the US indices are in a strong rally. I mean, okay, if I just literally take the whole picture, it's for the last like more than a year. If I just emphasize on the last few months, it has been to an upwards rally since the May. The same stands for USA 500, and the same implies to USA 30 as well. So US equity in a comp of good news have been boosted. So let me just double check over here. So they have been boosted on the Powell's when Powell emphasized that the Fed will provide advance notice, something that I actually I saw it earlier and I forgot to mention it. In his statement, he actually mentioned that the Fed will provide an advance notice before announcing a decision to make changes in Fed policy. So that's quite important because we literally stating that we will know in advance, even though there might be, that the markets are sometimes like pricing in the expectations. So yeah, but for the time being, he highlighted that they will announce in advance any changes. And also there wasn't any hint of a rush to hike, of a rate hike. Also, secondly, another something that might also boosted U.S. equities is the fact that Democrats, as I'm reading out loud right here, right now, Democrats appear to be making progress on the infrastructure package, on the 3.5 trillion infrastructure package. So, of course, we don't have any confirmation. It's not a done deal. Nothing changed. Nothing really confirmed so far. But yeah. But like the committees announced that the 3.5 trillion deal, they are very, very close to make a deal. What else? What else? Let's check your questions and let's get back to CAD yen. What's the time? So calendar, let me get my calendar back. So 15 minutes to go until the Canadian, the Bank of Canada release the monetary policy report. So as I promised to Chang Wun-ma, let's cover CAD yen. CAD yen. Here it is. Not a lot of, not a very interesting cross intraday at least. But let me just. Okay, bouncing this week between 88 territory up to 88.70, which also coincides with the 200. It's a 200 period median average. This is a 1 hour chart, dear Chuwuma. So this looks to be. So just let me put some shades on. So looks to be like a form. No, actually, it hasn't confirmed yet, but it looks a bit. I need to keep an eye on it. It looks to be like it hasn't shorter, not confirmed yet. However, but yeah, for the time being, the asset managed to move so far today to the upside, reaching 88. What is it? 88.55 territory. A bit of a sideways move, a lot of doji candle sideways move, I'm afraid, dear Chuma, for 1 hour chart. So it lacks of direction for the time being. As you can see, even the momentum indicators are implying to a sideways move, a ranking market so far. So MACD 0, neutral. RSI is below 50, implying to, that's MFI. So turn lower, suggesting some selling pressure just in the very, very short time frame, in the very, very in the very short time frame. Also a bearish cross over here in the from stochastics, but yeah. So next support for the asset in this 1 hour chart will be the lower Bollinger Band area, so 88.22. But for the time is being held on the upper Bollinger Band area, so yeah, it's sideways. I'm afraid there is nothing exciting in this cross for the time being, but nothing really clear over here. I cannot really. There are mixed signals from the momentum indicators, quite weak candles. So in the daily picture, let's see what's going on again. Failing to exit these 3 days performance to the 3 days range. Yeah, I don't know why you were interested in CAD yen, but yeah, for the time being is neutral. Intraday, however, I'm sorry, not intraday, in the long term, it has been to a downside move since May. So down since May, well below the 20-day moving average, failing to provide like any significant or substantial rebound. So overall outlook, long-term outlook remains negative. Euro dollar, yeah, sure. Euro dollar. So yeah, it got boosted from obviously from dollar weakness. So let's zoom out a bit. Faster moving average, I keep pointing upwards, implying to further bullish bias. Let me just put my indicators on, stochastics. Let me start from the daily chart. So in the daily chart, negative outlook is what dominates the market since the beginning of May. Sharp decline, enter the lower Bollinger Band area and keep extending lower, expanding lower since the mid of May, well below 50, 200 and 20-day moving average, and actually close to 1, 2, 3, 4 months in a row, actually close to the 4 months low territory. So a key, oops, wrong indicator. The asset holds a nice floor, or found the floor this week, since last week, sorry, at the 117.70 territory. So a break of that could find some support on 117 round number, and nearly 9 months, not what I'm saying, wait a minute, no, more than 9 months actually, 9 months support area, 9 months support area. So 117, the next long-term support, if the asset breaks 117.70 territory. As you can see, remains in a downwards channel. Momentum indicator is negative. RSI still negative, below 50, unable to actually to cross 50 for the time being. And yeah, a negative outlook for euro dollar in the medium term. Intraday right now, we've seen a nice rebound so far today, reached 118.27. So let's have a look. So already recovered more than 50% of the decline that we have seen yesterday. Fast moving averages align higher. Bollinger Bands, upper Bollinger are expanding higher. We have, stochastic over here. It topped above. It topped at 989. Sorry, but sustains a move above 80 territory. Hasn't really present any pullback sign for the time being. RSI flattened at 61, implying that we might see a bit of a consolidation for euro dollar. Let's take the 30-minute chart, might help us more. So you can see that after the retest of 118.27 level, which is actually it's an upper fractal, but also a 200 period moving average, the asset is like it turned sideways a bit for 2 sessions in a row. So it has entered an immediate short-term correction as it looked, because it was in an overextended and overbought situation. So as long as the asset doesn't turn back below 118.10, then it looks to sustain a bullish outlook. So 118.10 key support area for euro dollar intraday in the short term. Time frame. Key resistance, as you can see, 118.27, 200 period moving average, coinciding with an upper fractal, coinciding with a move above 50% Fibonacci level, and coinciding with 3 consecutive retests over here. So 118.27 a key resistance area, immediate resistance area, and 118.10 immediate support area for those that are interested in intraday analysis. So as we said earlier, you might I think you missed it, dear Tagwa. If Bank of Canada comes out and states to further cut on asset purchases in a weekly basis, that could be a hawkish stance once again. So that could support the Canadian dollar. Okay, so a hawkish Bank of Canada, it could support Canadian dollar. And actually, it might be already. No, we have another 4 minutes to go until the release. So yeah, but this is so as I stated earlier, further detection of quantities from Bank of Canada implies to hawkish tone from Bank of Canada, and that implies to a potential boost of the Canadian dollar. So, so Canadian dollar. Do we have Loonie somewhere? I should have Loonie somewhere. Let me find it. So, where's Loonie? Loonie, dollar cat. Here it is. Yep. Okay. This decline, it has to do again with the dollar weakness, but we have another 2 minutes to go until the Bank of Canada statement comes out. So I will revert in a second. Let me check what else. So what you're asking, okay, which elements falls USA 100 took what? Okay. You want to know what actually affected the USA 100. Let's get back to USA 100 then. Where is it? Give me a second, dear Vicky. Hello, welcome. USA 100. Where is it? Sorry, guys, give me a second. Actually, so there, as explained earlier, it's not, you stated that it falls. That's not really the case. It's in an upwards movement, retesting the all-time highs at 15,000. So it's not in the fall, but what it has affected the US stocks to open higher is the good news or the reports, if you prefer, in regards to the fact that Mr. Powell stated that they will give an advance notice in regards to a potential change of Fed policy, but also it was some reports that we got out in regards to the infrastructure package, the 3.5 trillion infrastructure package, and some reports that it has the committee has made progress on the infrastructure deal, even though nothing has been confirmed. As I said, it's not a done deal. So the infrastructure deal is still like it needs to be confirmed. So Bank of Canada leaves policy unchanged, reduce weekly asset purchases as it was expected. So let's finish with dollar CAD, since Bank of Canada statement and monetary policy and rate decision is out. So, okay, big jump. Okay, let me get back to dollar CAD. Where is my breaking news? Bank of Canada leaves policy rate unchanged, reduce weekly asset purchase to 2 billion Canadian dollars. Nothing changed in the interest rate. They kept the interest rate. They kept the rate at 0.25%. So let's see. It actually came as it was expected. I think, let me just double check the text released, the full text released. So rates unchanged, maintaining an extraordinary forward guidance. So so literally, actually, they came in line with expectations pretty much, because indeed it was expected that they will proceed on a potential they will proceed on a reduction of asset purchases, because especially after the labor data last Friday. The Canadian economy is one of the few that they keep giving strong signals of recovery, more than the other major economies. So let me check if there is anything significant from Bank of Canada. Statement. It was a long text. I cannot really check right now, but. So tappers by 1 billion per week. So in line with what it was expected. Actually, let me double check what's going on. Inflation will likely stay at or above 3% as for the remainder of 2021. This is what the statement states. So we have a boost, as you can see, on dollar CAD. It jumps to 129.95. Following the statement. Okay, that might be the fact that we were expecting a more hawkish tone from Bank of Canada, so that was a bit of a so yeah, that the fact that we haven't seen an aggressive or a very strong hawkish tone from Bank of Canada, at least for the time being, it might be the reason why Canadian dollar, instead of getting stronger, it actually reverted and it got weaker against dollar. Okay, guys, so we have the press do we have the press conference here? We do, right? So we have the press conference in an hour. So this will actually clarify whether Bank of Canada will get hawkish or not. So for the time being, the statement, the text release as I said, similar to Mr. Powell, we have a text, the statement being released prior to the conference. So based on the statement, yeah, the market's reaction looks to be that they were actually expecting a more hawkish tone. They didn't get that, so they are selling Canadian dollar. That's why we're seeing dollar CAD boosted to the upside, breaking 127.5 area right now. That's a huge candle. Hasn't really finished yet. It's just the 5 minutes. That candle opened 5 minutes ago. So okay, let's turn the 30 minutes chart. 125.26. That triple fractal. The very next resistance area to be seen, or today's highs at 125.40. Okay, but we still have an hour to go until press conference, guys. So yeah, that will clarify the whole situation. Guys, I'm running out of steam, to be honest. We are already more than an hour live, if I'm not mistaken. Yes. So a final call for questions. In regards to, let's finish with dollar CAD. So yeah, jumped higher. Next support levels to be seen. Next resistance areas to be seen. Fast moving average turn higher. As you can see, they are ready to cross, bullishly cross. Stochastics jumps as well. Bullish cross from stochastic, implying to a very, very short time frame bullishness. This is the 30 minutes chart, okay? This is in the very, very short time frame. So I'm referring to next few minutes or the next hour, okay? This is a 30 minutes chart. So keep an eye on this next support levels, resistance levels, for dollar CAD. While if I just zoom out and go into the 1 hour chart, so if it starts flipping lower, well, actually I would stay in the 30-minute chart. If it started flipping lower, then 134.87, the next support level. If it starts turning lower again, and you can use yesterday's bottom, it's quite significant, along with this huge tail that we got earlier. So support levels other than the 124.5 level, round number, it will be the 124.87, 124.40, and 124.20. That's just intraday, very, very short time frame. We are in a 30-minute chart, guys. But take care, because the conference is in an hour. And just 45 minutes before Mr. Powell. So things are expected to get shaky, very, very volatile. So take care, or wait until the markets calm down a bit, okay? So I can see that you don't have any further questions. I need to call it a day. Thank you very much for attending. Hopefully today's live analysis helped you. We will be here again tomorrow with Stuart, explaining analyzing the aftermaths of the whole week, of the events that we've seen the whole week, along with the explanation of actually tomorrow it's a packed day as well. So we have employment data out of Australia, second quarter GDP from China, labor employment data from UK, very, very significant as well, and jobless claims from US, along with the second day of testimony from Mr. Powell. So a very, very busy day ahead as well, tomorrow as well, along with the ADP employment change. So yeah, Stuart will be live. So yeah, join us again. So thank you for attending. Hope you're having a great day ahead. Take care, and see you again tomorrow. Bye-bye.